Sounds good.
You'll get a recording notice. You'll need to click off. Very good. All right. Welcome to our monthly Ranch Right webinar. And this month Jessica is gone. I did a terrible job promoting it. So we don't have a lot of attendees. It's going to be just us. So Eric is going to get an intimate conversation with a third of the Ranch Right team about inventory. So Chelsey is going to present for us again today. She again is our client integration specialist, helping our clients sort of integrate their lives and their processes into our process with the idea that we work together better and can provide a more effective outcome. So with that, Chelsey, I'll let you get started. Glad you're here. Thanks for getting it all together.
Oh, yes. Thanks for the intro, John, and for having me. Hopefully I can provide some value here. So inventory, it's a significant portion of a lot of our assets and has a big impact on driving our success. If you were in Executive Link, you just heard a presentation where John talked a lot about working capital. It is, for just to brush up, if you need a reminder, working capital is your current assets minus your current liabilities. And it's a liquidity metric that indicates your ability to cover short-term obligations due in the next year. So for a lot of us, inventory, such as like calves, and if you use sell by marketing or stalkers or yearlings, those would all be classified as current inventory.
Let's run a couple of, what are some other examples of current inventory? Jordan, you've probably got some good ones at your disposal.
Usually grain in the bin, cash on hand, accounts receivable, feed in the stack might be. Those are the most common ones, and Chelsey hit on the calves.
Yeah.
So.
Awesome. Very good.
Yeah.
Oh, sorry, I was muted. What about timber? Standing timber. How do you guys treat that in the States?
Good question. Chelsey?
Have you?
I don't know, like for tax purposes, but I would think that would, I really don't know, but I would be hesitant to put that as inventory because it hasn't been harvested. Like I would treat that kind of like a crop that's been planted but not harvested yet.
Yeah, so it's kind of like standing feed.
Yeah.
It's not harvested yet, so okay.
I've got a question for Eric on timber. How fast can you sell it? That's, grain you can sell tomorrow or today even if you hurry, but how fast can you sell that timber? I mean, if you need the money, does it take 60 days to get the check? I mean, I was just curious for.
Yeah, 60 days. If there's a contractor in the area, that's the constraint. But if you've got a contractor, or if you got a contract with the mill, you can get a check within 5 days of the first tree getting cut.
But you got to get it cut and get it.
You got to get it cut, and that's the loggers don't always show up. Don't ask how I know that.
Well, Chelsey knows that too, doesn't she? Sometimes the loggers don't do what they say they're going to do, and then they show up after the timber market's crashed, and then they want to start cutting then. So
yeah, exactly.
Just we'll make a note that Canadian with suspenders is the one asking about timbers. So
yeah,
I'm a lumberjack and I'm okay. Me too. Me too.
Yeah.
Good.
So is there anything else you guys wanted to add about working capital, or like I think the main point there is that it's, and Wally hit it too, like how quickly can you sell it? Because I think that's enough said.
Good.
So I think in terms of inventory too, it's also important that we track it in a time frame that matches our production cycle of our business, and also that it's valued properly so you can ensure an accurate understanding of your financial position when you're trying to make decisions. So I would always err on the side of caution and say it's easiest in the long run to record or track your inventory monthly. Isn't it, Wally? A lot easier to remember something happening this month rather than 6 months down the road. But I would, yeah. But I would
Just
cut,
for anybody watching that doesn't know, Wally is a reformed inventory neglector, and maybe he is in the reforming process as we
Nah,
speak right now.
it's just hard to keep up with all these stuff. I got better things to do with myself till the end of the year.
yeah, till the end of the year, right? We always have something better to do or more pressing until it's the end of the year and we're cursing ourselves. But cow calf, like I kind of think of match it up with your, like I said, your production cycle or your activities. So branding maybe or weaning and that sort of thing. Preg check when you have everything in and accurate numbers to base it on. That's when I would, like, aside from when sales and purchases are happening, that's when I would be most concerned with updating the numbers, updating your number of head. I don't know if anyone else has any comments on that.
So I've historically done it where I do monthly, sometimes they're monthly counts, but often it's monthly estimate based on, sales and purchase and debt loss type data. But then we do a hard count at some regular intervals. So take hay stacks as an example. We count them in the fall before we start feeding. We will record how many bales are fed each month or each week, right? And enter those. But then we do a true up, let's say at the end of the year, and we might do another true up at the end of the feeding season.
Yeah, absolutely.
Just to make sure we've kind of got things right. With big cow herds, we always do a hard count at preg check. And then we do estimates, what is effectively an estimate the rest of the year.
Yeah.
You don't do hard counts more often than just preg check?
Well, it depends on the situation, Wally. And so this is a case like Ryan's place. His guys are counting those calves every day, which is, especially when they're feeding, that's fantastic. But yeah, I mean, on a big extensive deal where they're out on the desert for 180 days at a time, we count them whenever they get on a truck. And then whenever you run them through the corrals, and some of those cows only see the corrals once a year.
I hadn't thought about that.
Yep.
Yeah. And
more counting is always better.
For sure. And I think you can just kind of hit it on the head there. John, it doesn't have to be the last day of the month that you're out there counting. Try to just tie it into what you're already doing when you're counting them on the truck. If you have a big move and you're counting them all through the gate, like you're making a note of that somewhere. So just take it one step further and make sure it's recorded that way.
Yep.
And in a direct to consumer context, I may have done that in a former life.
Right.
Counting all your pork chops at once, like every month when it's over 100 degrees, right? Like you can't do that in the walk-in freezer, right?
Right.
So you do like once a week you might count just pork chops, and then the next week you count T-bones, right?
Yeah.
So it's like a rolling type deal.
Yeah, it's the same sort of thing where you would have a count, I'm assuming, from your cut sheet of what you're putting in the freezer and then what you're selling or taking out of it. And it would be an estimate every month. And then there would be set times where you get a true count.
Yeah.
Does that?
Yeah. And we actually do it. Eric, your rolling count is a good idea. We do advise our direct consumer folks to do an end of the year count.
Yeah. And we do too, but we can only do that in the winter, right?
Well, that's the thing.
Take everything out of the freezer.
If it was the end of the year in Australia, that might be more of a problem than it is for our Northern Hemisphere people.
Yeah.
Absolutely. So we kind of have talked about a few different examples, but I would for sure be expecting sell-by people to be reporting it every month just because their inventory is changing so much more frequently, turning over. Anything else to add on to that? No?
Awesome.
Oh.
Really good.
All right. The next component of inventory would be your valuation. And we want to make sure that the inventory is valued fairly. I think that people in general have a tendency to overvalue their inventory because it makes us feel better seeing a bigger number. on our balance sheet, but I think we all just want to stress that that isn't helping you in that scenario. It's just giving you a false sense of comfort. So as we've touched on, we'd like to see them valued at what you could get if you had to sell the cattle like that week, or sell any of, sorry, I always revert back to cattle, but if you had to sell the inventory that week, what realistically could you get for it? Yeah. And, you know, some people will make the argument that they inflate the prices or kind of pick the top end for their banks and financial reporting, but I would make the argument that the banks all have their own valuation that they use, and they're revaluing your inventory anyways. So I don't think you're helping yourself with that argument. Is that fair?
Yeah,
Or anything else to add?
that's fantastic. One thing to remember is that if I have a herd of cows, what we're talking about is selling the whole herd. And I'm a little less stringent than you are, Chelsey, about having to do it in a week. I might say you got a month to do it, but I'm going to sell every cow. So that means that one gal that I've been nursing along, who's got 3 wheels and bad tit and a bad eye and, you know, 1 ear and no tail and 2 spots, like she's in that inventory value too. So we do want to make sure that, you know, yeah, I sold 10 cows for $2,800, but I sold 2 of them for 900. And the average is going to include all of the cows.
Yeah, exactly. So we've told you here that you need to track your inventory. And so now we're going to show you the tools that we have. I think it was a Daniel with Ranch Right that created these spreadsheets, and we have 3 variations, and these are for livestock. They could be adapted for timber if you wish, Eric, or direct to consumer, and more for feed as well.
Before we go there, Chelsey, can this lumberjack stir the pot a little bit?
Oh, maybe.
I can't resist, because we have a golden opportunity here. We have a Ranch Right guy, right, John, with his understanding of inventory valuation. RFP does it a little differently, and then you are a CPA. How do we all feel about having a brief discussion on the different ways of doing inventory valuation compared to by the book way, like in accordance with GAAP,
Right.
and, you know, cost of goods sold and all of that?
Right. So I'm speaking right now purely from just management accounting. So we're using these for management decisions and not taking into consideration that they're valued at cost down here for tax purposes, or you know, lower of cost and net realizable value in Canada and so on. I don't know. Yeah. So I don't
that's
know.
good. I mean, that's the first time I've heard that explanation.
Okay.
That it's a managerial accounting versus a financial accounting.
Yeah.
This is an awesome question, and I think that clarifies the tax. One thing that in the US we're basically always looking at tax-wise is cash basis, right? And so or cost basis, right? So that would be cash minus any depreciation that's been taken. Jordan, do you want to comment on this a little from our ranching for profits perspective? Because it is a little different there.
Specifically, how the golden rule is that the inventories have to match for your closing and opening, right?
The price matches, correct.
Right. So, and I think that's just for when we're projecting. So if we're sitting down doing 2024 projections now, we're going to pick a value for that breeding herd. And then we're going to work through your stock flow and projected sales. And then December 31st of 2024, we're just going to use the same values there today, which lines up with, I always kind of refer back to what Wally teaches too. We use today's prices. We know what today's market is. Now, when we get to recording stuff in Ranch Right, I 100% agree with let's let it fluctuate with the market.
But we're basically talking about actuals, right? Because when we produce a P&L, it is a recent history, but it is still history. That's water under the bridge.
Yep.
Very, very good. So and I think, Eric, your point is good. Go ahead, Jordan. Did I cut you off?
Well, and I was just going to say, I agree with Chelsey that most people want to overvalue their inventory. Like you said, they kind of see the they see the better half of their whole, like I always think of cow herd too, but it's the big average. But I've also got a few people that when we work with stockers, they're really hesitant to revalue them every month. They just kind of leave them at cost basis, and that's kind of how they're doing all the math in their heads. And I keep pointing out that you keep spending money on these animals every month. Let's let the weight gain show value. I mean, hopefully that's the point, right? Keep them alive and keep them healthy and make them gain weight. So I try to push kind of ratcheting that up month to month on stockers.
But therein lies the rub, right? In a stalker deal, you're creating value two ways, through pounds and through market conditions.
Yep.
And that's where it gets fuzzy for me, at least.
And that's also too, like, why, I mean, I just said it as sell by, but stalkers in general, you would want to be revaluing every month because they're gaining weight. You're right, or they better be. I guess it depends what your plan is, but like we're
They're
all
gaining
hoping
weight
they
or
are.
they're dying. That's right.
Yeah. Right. So not only are you like, not only are you revaluing the price per pound to make it current, but also the number of pounds that they've gained, right? Because that,
Yep.
Yeah,
And then, yeah, exactly. And then again, Chelsey, I think we include the market to market. Hang on one sec. Sorry, maybe I'm going to mute you. Nice to see you. But we are doing the mark to market, which is, as I understand it, gap acceptable, correct?
yeah.
As long as it's not done with criminal intent, like Enron. But assuming we're doing that reasonably, that is consistent with gap, and then that is showing us the impact of that weight gain and the market, right? And sometimes animals gain weight and don't gain value. And that's a very important part of what the sell by context sort of helps us clarify.
Yeah.
And I think what our accounting system helps us clarify, right? If we are doing it that way, right? Boy, these suckers gained 100 pounds last month and they went down $100 per head in value. Like, ooh, that's too bad.
And I would agree with you, Eric, too, on you're changing classes of animals. Like if you're in a heifer deal too, I would probably do weigh up values until they're proven bred, and then they're a different animal. So you could split that off too.
Yep. Very good. So again, I think, Chelsey, one of the question Eric is asking is great because it really clarifies the context, right?
Yeah, absolutely.
What context are we working on? Because if we're working in tax, that's one very different thing, and Canadian tax even a little different from U.S. tax. If we're working in our RFP projections, right, that is a different context. And if we're working in our month-to-month ranch right reporting, that's another context. We got to know what that is.
We can continue, but if we have time to wrap this up at the end, right? Like, then there's the whole direct to consumer aspect. Like that's like, I don't know if valuing your pork chop at the so-called market value is the way to do it, because there is production cost tied in that. Like that's a classic cost of goods sold kind of scenario, right? So, and as a former direct consumer, that's something that I always struggled with.
Right.
Because if you value your inventory at market prices and you sell it for that market price, because you're a price maker, not a price taker, where does the margin show up?
On the income statement?
Right, but your gross product,
good answer,
inventory.
Well,
I said it. We'll continue if you want. I'm just stirring the pot, doing my job.
No, you're good. The value shows up in the cost. So you put an animal in, and then you at a wholesale price or a live animal price. Let's just say you put it in, you add processing, and then it becomes worth what you can sell it for. And that's where the margin shows up in that case. And this is one people do get confused about. They're like, well, wait a minute. I had it in for $2 per pound and I sold it for $2 a pound. So those two cancel each other out. Yes, in the gross product, but in the in the
Trading account?
revenue and the sales, but we have the purchase that came in or the transfer that came in originally, which is the difference from that is where the margin is. But let me add one other thing for our direct to consumer people that do straight up direct to consumer. Don't forget about things like spoilage, broken packages, all these things. So I recommend like an 85% of retail type value. So if you sell pork chops for $2 a pound, which I know is ridiculous, put them on your inventory at $1.70. Does that make sense? Because again, stuff happens. Where it gets harder in my mind is when you have a heavily mixed wholesale and direct to consumer business where you're selling wholesale to the school district or the post office or whoever buys meat in bulk in your region. Then we have to come up with, I think you're better off to use a wholesale price and then add the retail as an additional margin. And I think that follows with what Chelsey said before, which is value it fairly conservatively. You can do some, you can do a range of variation in there, right? Where we do 70% of our sales wholesale and the other 30% retail, and we're going to come up with kind of an average between those two. But I think if you are a heavily mixed wholesale retail, just use the wholesale and then sell it, and then sell as much as you can for retail. Does that make sense?
Yep.
I think the lesson is don't sell pork chops.
No, the lesson here, and this is one that I keep trying to hammer on, and Chelsey is very good about this, and so are you, Jordan. The whole point of these financials is don't BS yourself. We can talk ourselves into all kinds of things, and I can write down my inventory for whatever I want it to be. And we've seen people that have tried to do this. This will lead you astray. You don't want to be too aggressive. And Jordan, I think the example you were talking about, you don't want to be too conservative, right? Yep. If you're always back to that, well, I paid $800 for, like, that's not going to lead you down a good path. You want to be current, but we've got to be reasonable. Financials are one of many tools we have that help us avoid sort of screwing ourselves, if you will, right? They help us, they keep us from fooling ourselves is probably a better way to do that. We can do it, but we're really trying to not do that. And again, we're just getting one additional perspective on, all right, this is a way that I correct for my own mental biases.
And that's the beauty of the trading account too, is you can inventory what you want, but when it turns into cash, that's when the rubber hits the road.
Yep.
So if you're over, and I think this is your example, Eric, if you're overvaluing them and you sell them for under, then you've factored in a loss for yourself.
Yeah, the thing with the transfers is you can pick what enterprise or what class you want the profit to show up in.
Yep.
Right? Like, are you making bank selling live animals to the meat division, or are you making bank selling T-bones? Right? And that was the challenge we had, because there is going to be inherent bias, and what side of the scale are you going to be biased towards? And this is where this dovetails into mission and vision and identity, right? Are you a livestock producer that sells meat, or are you a meat seller that buys live animals?
Yeah.
I think, and I don't know if we need to have like a conclusion on this, but I would view it as when you're doing the transfer from like the cattle division, it would be for what the value of those cattle are at that time. And then anything, and then
on an open market.
The T-bone. Yeah, on an open market. That's how I would do. Like, I think that's the only unbiased way to do it.
Yeah, I think when you said the term pick, Eric, I think that was a little strong. You get to pick which enterprise gets the value. I think that's a little strong. You're right. There's going to be, you'll have to recognize the synergy of the enterprises, but it'll show up in one of those trading accounts.
Yeah.
Yeah. Hey, well, this is one of the reasons to use Chelsey's system of a transparent market report as opposed to a cost basis. I have seen a number of cases where a farm and a ranch are married together. Farm products are transferred to the livestock at cost. And I will just tell you, over a 20-year arc, that leads that business in a very bad direction. One, you have no pushback on farm costs, right? Doesn't matter what my cost to produce is because I sell it to the livestock at cost, right? So there's no like market saying, hey, it costs you $200 to produce this. It's only worth 150. What's the deal, right? And then the other part is you wind up with what could be a very good livestock business paying exorbitant, fees, if you will, for feed. And then everybody's like, man, this livestock business sucks. We should just farm. That's like, whoa, that might be the wrong thing to do. Go ahead.
The same thing happens with cattle if you use strict market reporting. Like in our context, right? Like one of the reasons why we converted undervalued livestock into highly valuable meat.
Because of your region. Yep.
Region, and those are just the only animals we can get, right? So, and then this is the reason why every rancher, at least in southern BC, wants to direct to consumer market when there's a bad cattle market. But then when the markets are good, like right now, no one is bothering selling T-bones. So there has to be like a long view, right? Like, are you a direct to consumer for the long run? If that's the case, then you have to be willing to sell your animals to the meat division for a little less than market value.
I disagree with you, Eric. Everything needs to be done at market, period. The feed you put in, the grass you use, everything at fair market value. And granted, your meat business, as much as you want it to succeed, is going to suck right now. But you should have reserves built up from the last downturn, not to get on you or anything, but I thoroughly enjoy it. So.
But I think the combined point here is we are in a period right now where it's hard to make money as a direct consumer business. If you're a rancher who's selling meat to add some extra income, then you're probably getting out of that. If you're in the direct consumer business, or if you're in the sheep business right now, you're kind of taking a beating. You may be willing to do that because that's your business, and it's gonna change. So it's not like it's gonna be this way forever. Maybe we go on, but I don't agree with adjusting the values to make both sides of the business look good. I believe you do fair market value and then say, yeah, we're taking this isn't working very well. That said, we're going to continue doing it. Does that make sense? Like, you make an explicit choice to pursue a less profitable enterprise for a period.
In the short run.
Yeah.
In the short run. That's right. I mean, well, we can go on at length about this. There are all kinds of industries that go through hard times. That is not necessarily the time to get out. But it's also not a time to BS yourself.
Can I talk about your inventory?
Yeah.
Are you ready?
I don't know. Chelsey, are you ready? You look nervous.
Are we ready to move on? It's just like what's going to come out of Wally's mouth.
Well, one thing on this inventory, when you got 300, 400, the weights there, see what I'm saying? And then you're in the sell by and you're moving cattle through there. It gets a little confusing. How do you handle that?
Okay, so why don't we pull up
let's get into some
version of our inventory. So Wally, are all of yours on one sheet in the inventory?
I think it's all on one sheet.
Okay.
You mean all of my inventory?
All of your inventory on one sheet, or
my inventory on places that I have animals are on one sheet. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Just a second. That ain't what I wanted to do.
So yours is separate.
I have 10 locations.
Right. Okay. So yours is kind of a custom deal, but I'm sure it's based on one of our others. So is it okay if I pull up one of ours and see if I can answer your question that way?
Yeah.
Does that work? Okay. So I will.
And for the record, while she's pulling that up, we do that. We have a template that we start with, but we do customize it for each customer. So Wally, as an example, might have 4 weight calves at 4 different locations. And in Wally's case, we track those locations separately. I do the same thing, where I have, heifers over here, cows at a different location, et cetera. But again, for each of our customers, this is a custom produced sheet tailored to the individual situation.
Okay, so I'm
Got
gonna
screen share?
share, yep. Here we go. So are you seeing?
Yep.
It's, okay, example, ranch estimated livestock inventory. And so this is our version of the spreadsheet that has multiple classes or enterprises on one sheet. So is this looking similar to what yours look like, Wally?
Yep.
Okay. And so did you want to ask your question again?
Well, the thing to me is let's just say I have 3 different sets of cattle at somebody's place,
Right.
and there may be 3 sets of cattle, and since this just a second here, boom, it says by weights. Well, okay, and see yours, you've got yours broken down in stocker steers and stocker heifers and stuff.
So
For
we do
mine,
have another one here.
what's that?
This one's
I
maybe,
think your stalker sheet is going to look more familiar for him.
is this, let's see. You're sharing. Let's just make sure I'm getting the right one now. So this. Okay.
And the one you just used is we use with customers, for example, that have a cow-calf herd, keep stalkers. And so the stalkers are kind of all out of one calf crop. They're all more or less the same. So we advance them that way as a group. In Wally's case, in my case, and a number of others, or if feedlot, right, we have multiple types of stalkers, so then we break them down. So Wally, this looks a lot more like yours, right?
Yes, this looks a lot like mine.
So yeah, here up in this area,
Yep.
it just for everybody else, I'll clarify, Wally, is where you would put the number of head
Okay.
in each month. So up here we have each month of the year.
Yep.
And then down here in this area is where you're going to assign a value per head. And then this automatically generates down here what the value.
What I'm saying is okay, if I have a set of I have both stalker 400-pound stalker steers and stalker heifers.
Right.
And I may even have 3 different sets, just depending on it gets very confusing blending them in to get them on the inventory.
Yeah, I understand that. So maybe in your situation, because you would have different lots that, you maybe bought at different times,
Yep.
but at a certain point in time, they end up being within the same 100 pounds, 100 pounds, and would be therefore classified together on this spreadsheet. Is that what you're saying? And that kind of is.
I'm just saying, to get the way I track stuff now, granted, on paper, my inventories have a problem. In my mind, they're fine, get them on paper and to keep so I understand what I'm doing and not, I need to work on that.
Okay. So one option would be to just take, like, so a helpful thing, especially with stalkers, and if they're at someone else's place, then I would be updating the number of head from the feed bills you get every month.
Yep.
So you could just in the cell add, like, okay, I have 3 different groups here that are 400 to 500 pounds. You could do it for the heifers. I understand what you're saying. I think you're going to need another tab or a more customization where it separates the heifers and the steers that you have at the same place. I think that's going to be the easiest. But within heifers, if you have 2 different groups and one's 425 pounds and one's 475, you could add them the number of head together here.
Okay.
this.
Well, I think what would help out more than anything is if I had, a steer line and a heifer line.
Yeah,
Yep.
absolutely.
And that since we've played with yours last, Wally, that's what I did with mine. So I broke out heifers and steers at each location and then go from there. I do want to add a note. Wally's inventory is ridiculously complex compared to anyone else we deal with. So Wally's problems are not everyone's problems in this
Mhm.
But yeah, I think we just keep building that out so that it has the granularity we need to track the value reasonably accurately.
Or the other thing is I quit.
Well, it's possible. As the person that spent hours last year getting your inventory ready for Walter, I don't recommend that.
Well, get ready, because Walter, I have said, Walter, we need to do something because there's a lot of numbers there this year. And
Yep, he's on it. I've been getting emails from him about every day. All right, keep walk us through this, Chelsey. So keep going.
Yeah, so like I said, up here in the top section would be your number of head, and
count.
yeah, your head count. And then down below would be your value per head. Pretty straightforward. You don't touch any of this. I don't know if you have a better visual on your screen, but this is actually grayed out, I believe. So you're not supposed to enter information here. Or change anything that happens in those cells. And that's the same as down here. And so we also have a tab here for your transfers, Eric, going if it's going from enterprise to enterprise. And I think this is just even a record, or well, this is just to keep a record of it, right? And maybe just provide a bit of backup for any big changes back on this spreadsheet. If all of a sudden you don't have, just to make note for your bookkeeper. Is that fair, Jordan?
Yeah.
Anything more detailed about that?
One other thing on my head counts, where I have stuff going in and out every month, kind of like Wally does, I will try to usually enter those as a formula, right? So it'll be 40 plus 5 minus 10, blah, blah, blah. And those track transactions. And the other thing I use a lot on those cells, if you right click on one of those cells, it will give you the option to add a comment. And I really like to do that so that I explain what happened, right? Sold 25 steers out of 50, right? And then the other thing we do is when we make the journal entry in QuickBooks, we attach this spreadsheet. This day's version of the spreadsheet, so that when we get, and I assume you're headed towards QuickBooks here before too long, when we get into the accounting software, we have this to kind of fall back on to say, oh yeah, we changed the Stalker Enterprise up $100,000. Here's the paper trail of how we got there.
Yeah. I wasn't exactly going to get into QuickBooks,
Perfect.
but
That's fine too.
We can go into QuickBooks.
No, we don't need to.
But really what all of this is information that we as the bookkeepers use to update your QuickBooks. And if you heard me rant on our next webinar, it's just the more information you provide us, the better and the more accurate your financial statements are going to be. So it might seem a bit daunting to add a comment to all of these things, but it is really, we do find it really beneficial. If, especially like John said, if it's a situation where, half a lot is selling or et cetera, it's really helpful.
Yep. The other thing Wally mentioned, if you're growing stalkers through the winter, through the summer, right? And let's say they're doing 2 pounds a day, they might stay for 2 months in the one weight class, and then we advance them up, right? So as you move across this sheet, you may see things, click down to the next row. And again, that's where I use my comments to say, okay, of these, 100 of them moved from 400 to 500 pounds. Right.
On the inventory, if you buy a set of cattle and they're going to end up at a fixed place for most time, or they're going to get sold out of there, And I'll give you an example. We buy some calves, they go to Ricky Kane's to get started. And then they go to another place to get wintered, and then they finally end up at Grant Harder's to be summer grazed. So you just enter them into Grant Harder's, or you
Again, this is a more complex issue that a lot of people aren't going to come across. So what you could do is I would enter them in the place that they're at when they're there. And then when they move on to the next location, I would record it in this transfers and say moved whatever date, the date. And instead of class, just, I mean, we're smart enough to figure out, just say moved from Ricky's to, sorry,
Yep.
I missed the next person's name, but
that's all right.
etc.
Go ahead, finish. I'm sorry, Chelsey.
It is,
Yeah,
it is a location transfer, Chelsey, which is exactly correct. That's what I do in my.
So
yeah.
do I have this in my inventory and don't realize it?
You're the transfer sheet.
Yeah.
Yes, but we do not have we do have different locations for you.
Yeah.
So for example, when you go from, let's say you went from Kane to Harder, just as an example, that we would just do a transfer from location to location. Yeah. And the really cool thing about that is if we do it right, it allows us to compare the margin at one location to another.
Mm-hmm.
And again, I think I've shown you this in mine where I have, you have 7 or 12 locations there. Well, I can show where the best margins come from. Does that
Does
make
that
sense?
answer your question, Wally?
I'm pondering that. Oh, I'm
Okay.
quite sure this debate is going to go on, Chelsey.
Okay,
So it's perfect.
all right.
Again, I want to reemphasize, Wally, your case is fairly unique.
I understand.
We deal with
I am-
definitely 4 people that
I'm-
operate like you do.
I'm-
So
I am-
I don't want to get too complex here.
Yeah.
Okay, so I'll just run through quickly the other options here. Which one? Maybe. Okay. I am a little clunky with this, so sorry.
Right.
Mhm.
While you're looking for that, Chelsey, when I finally figured out how to do the monthly changes, because I think the first year I just did an annual change. And when
Yeah.
I figured out how to do the monthly changes, it was, I think that's a really powerful tool. Because what I realized is that the whole time in Kansas, when our personal QuickBooks, I always kept track of our retirement account balances.
Mhm.
And it's the same thing. You get the statement, and it says you made this much money or you lost this much money. Here's the value, and you just change it in there. And so to me, this is our investment portfolio of cattle. We've got different mutual funds, different stuff in there of different weight classes, different breeding herds. And so to me, it was just kind of an aha moment for me on the bookkeeper side too.
Yeah. Yeah.
And we pay attention to it and expend effort on it because it's valuable, right?
Yep. Yep.
This is the principle of stewardship, writ small, right? Yeah. Love it. Very good.
Yeah. Okay, so you should be seeing now the version of this where we have the different enterprises, each have their own tab. So they, again, up here, you're putting in your quantities. So you would have heifers, steers. So maybe be how we modify yours, Wally, or figure out how to do that.
I'm not seeing different enterprises on tabs, Chelsey. I'm seeing all in one. Yeah.
Okay, let's see.
But I can picture it.
Haha. Well, that's not helpful to the people that can't. Okay. Screen 2. Okay. Why?
I'm glad you've come to that epiphany, Jordan. I'm gonna just always dig on this because I think it's funny. Nobody else may, but Jordan is re-emphasizing the fact that a number of years ago, Chelsey and I had this debate about annual versus monthly, and Chelsey won. So
And Chelsey won.
we have gone to Chelsey's system, which she told us was the right one from the beginning. We did the wrong one. We did
And
the
there
wrong
you
one
go.
for a year, and here we are doing it Chelsey's way. So
You got it publicly admitted and recorded, Chelsey. Congratulations.
Perfect. I wish I could take credit for it being my system, but I've worked with some people that are a lot smarter than I am, and it's their system. So I'm happy to pass it on though. Okay, so
either
now,
way, it does work very well and provides a ton of value. Here we go. We got enterprises. Good.
okay. So along the bottom here, we have cow, calf, heifers, steers, feeder cattle. Again, the transfers tab, this is the same. And here, this one has some examples of what it might look like filled out. And it's nice here, like, you know, to add some notes if there is anything that you just want to remember or might be valuable for your bookkeeper. More information is better for the most part. So yeah, back here, just in the feeder cattle, again, we have the number of head, the estimated dollar per head, and then this will automatically generate down below. So really it comes down to, I think, personal preference, what inventory sheet you think makes sense and works best for you. I don't know if, yeah, any other comments on that, John?
Yeah, quickly. Just if we will scroll down to the bottom of this, in this particular case, this is the most common format we use. The feeder cattle total value, so that line right there where your cursor is, should match the balance sheet that ends that month. And then the change value, the feeder value change, will match the inventory change number, the mark-to-market number that we put on the P&L. And the easiest way to sort of truth check these is to make sure that the balance sheet has the right value and make sure that the P&L has the right change. Usually, if you've got the right value on the balance sheet, the P&L takes care of itself, as we always talk about. But these are good things to check periodically and make sure that we line up. And again, when we talked about working capital as an example, right? You have heifers, steers, and feeder cattle. Those would all be lumped into well, they probably aren't lumped, but they would all be categorized as current assets, right? And then our cow calf enterprise would be a fixed asset or a long-term asset. And so those adjustments would appear in the balance sheet in those appropriate places.
Perfect. So we got one more I'm just going to close this. So that'll probably simplify things for me here. I don't know why I didn't do that. Okay. What one are you seeing now?
Back to the original. I can see your cursor moving around.
Okay, so this is the one, it's not like Wally's, but it's the first one I brought up. So we have the cow, calves, bulls up here, and the different types of or classes of livestock. Well, yeah. Down here. So again, just another option. And yeah.
Now, I don't think we showed it in Wally's. We've built a number of them. I have mine built this way where we put the cows in by age. So we put cohorts in, right? 3-year-olds, 4-year-olds, 5-year-olds, obviously not written as that, but you know what I mean? Where we track even within the cow herd, we can break that apart. So this is very much refined according to customer, desire and need.
Yeah. Perfect. So are we good then with these inventory sheets?
I've still got one question.
Hang on, Wally. One other thing, which is when you work with us, your bookkeeper can help you fill this out. You are not just left to your own devices to fill this in. Wally, you and Josie work fairly long, hard hours together getting these things filled in, right? You're not just
Josie worked.
Sorry, Josie, that's what I meant. Did I say Chelsey?
Be honest.
So yeah, good. So anyway, so that's one. I don't want anybody to feel intimidated by this or uncomfortable with Excel. We will help you get this filled in.
Absolutely.
I've got one more question before we move on from there.
Okay.
Okay, you had you got to realize I come from a number, big chief tablet and a number 2 pencil or whatever. You had up there where you could type in information and notes on one of your inventories.
Yeah.
There.
Yeah.
Okay. Now, can it have something to do like the bottom of mine to make notes? I mean, or you understand what I'm trying to say?
Yeah, you're wondering if we can get one of these on your spreadsheet? Yeah. Yeah, I don't see any problem with that.
Because I hate, granted in Excel, you can click and you can make notes and stuff. But like I said, let me continue on for a bit and I will see.
Yeah.
But
Okay.
I like it printed out. I like the book in my hand and stuff.
Yeah.
And I ain't changing.
So one easy thing we could do here, Chelsey, we've called this transfers, but if we wanted to, we could just make this an entire page of notes, right?
Yeah.
Transfers would be one of the things, but if there was anything else to, hey, 7 head died, well, let's just throw that in here with a date so that we can tie it back to the other worksheet.
And that's what I was thinking too. I was thinking about saying that, but didn't want to throw a wrench in things on the recorded video. But yeah, any information that's useful, don't limit yourself just to the enterprise transfers. I think, I don't know. I feel like I know a lot of people where it's a lot easier for them to just write a note and when they're experiencing it. And so I think that they could do that here.
Yep.
Mm-hmm.
I got one more question before we wrap up. If we're done with this, is that okay?
Yeah.
Okay, so we've covered cow-calf, we've covered sell-by stalker types, and we even talked about direct-to-consumer types. What about custom grazers? In the context of the Bud Williams inventory triangle, right? Always have cash. Okay, that's pretty obvious how to measure that. Always, and then have cattle and feed, right? Well, how do we the custom grazers? They don't actually have an inventory, but I would argue that during the summer, especially at the tail end of summer, they are stressing out about inventory way more than anyone else. Is there a way to codify grass inventory? What are your thoughts on that? And how would you do it? Annual unit days?
Well, to me, Eric, if you've got paddocks, you estimate their animal unit dates or your standard stock days or whatever that you have out ahead of you, and to me, it's very easy to know how much feed you have out ahead of you.
Right, but is there any value taking it one step further and actually putting that in our accounting software? And then even going one step further and making the transfer of AUD to
they have value. You understand what I'm saying?
I just don't want those custom grazers to be left out of the inventory.
Well, thank you for this. I would treat that kind of the same as like the grain that's been planted but hasn't been harvested, right? Or I don't know. I don't know, John, Jordan, like, sure, you could, I'm in a mental battle of like a recovering financial accountant and like
Exactly.
right now of saying, I don't know. It's just like, is it creating value? Is it giving you useful information to put it in there? Or is it just creating work? I don't know. Like you as the client have to, I feel like, make that decision. What do you think, John, Jordan? Like it's management accounting, everything's fair game, right?
Go ahead, Jordan.
I would not put it in there because I agree with you, Chelsey. I think it's just going to add more work. My argument to that is even if you're custom grazing, you're owning your own livestock, you do need to know your stockpiled forage and your grazing carrying capacity. So I think it would apply more to everyone, regardless of if you own cattle or take cattle in.
Yeah, and we have a customer that has a bank that will allow them to add grazable feed to their winter inventory.
Right.
And that's an interesting thing to do. Not most banks will not allow it, so that's one whole piece. But I agree with Jordan that having a grazing plan and having an accurate assessment of what you have for in front of you for grazing days is very, very just as important as how much hay you have in the stack. we count hay in the stack because it's easier to count, and most bankers say, yeah, feed in the stack. That's right. There's more risk associated with feed in the pasture, but it still has value in your business.
Right. And I guess that's what I'm saying. I mean, if we keep on saying grass has value, well,
Yeah.
let's put a dollar number to it.
Yep.
And put it on the financial statement somewhere.
Yep.
Right. Especially in a drought situation where you don't have any cows, but you've got grass. How are you going to sell it? Like, I mean, if grass is inventory, in my mind, then it has to be more than just a production kind of inventory system, like a grazing chart.
Yep.
But I honestly don't know how you would do that. So.
So basically, well, wouldn't you just use, go out there and figure out how many animal days that you have out there and the whatever you're getting to set, for that animal for that day, and you got it.
Yeah.
The value, correct?
Yep. And maybe we discounted some for some risk.
Yep.
All right, Chelsey, I'm going to make you the host. I'm going to have to jump off here. Your 20-minute presentation has taken longer than you thought it was going to. It's good. Thank you ahead of time for doing this. Yes.
Contact me later this afternoon when you.
I will do that. I need to jump on a call with your cousin's niece's nephew or something, whoever Eli is.
Okay. Yep.
Okay. Awesome. Chelsey, I'm going to push that host over to you, and I think it's require you accept it and then keep rolling. Good job.
Okay. Thanks.
Okay, thanks.
All right. I just have one more thing that I want to touch on. We talked about it in that spreadsheet of valuing the inventory. And so kind of within our Ranch Right team, we've talked about this a lot, and we have in this presentation a independent value. So to me, where you get that is from your local auction market, or where you're going to, where the cattle are located. Maybe in your case, Wally, you would want to value them where you're going to sell them or where you plan to.
And let me, Matt, may I give you an example of that? Right now, Chelsey, if you have cows sitting in northeast Oklahoma, a young bred cow in second stage, she's worth about $1,300 to $1,400. If you have her sitting in northeastern Wyoming, she's worth about $2,400.
Yeah.
If you have her in Ohio, I haven't figured out what she's worth there. So, but that is, that's, you just need to be aware of that.
Absolutely. So what we think is a good resource to start in this valuation is, finding an auction market that reports to USDA and that's close to where the cattle are. So that's what I've pulled up here. This is just for Oklahoma National Stockyards on Tuesday. So this is all feeder cattle. So other things I'm looking for in this is just an average, right? Like not going for the most fancy or anything like that. So for example, right here, we have some cattle or 3 different lots that are within 12 pounds of each other. I'm going to pick the lot that has the most cattle in it because I feel like that is a true representation, the most true representation of the average of what sold that day. So I'd be using this price, this $315.80. And that would probably be the biggest part, or the biggest thing is you're not going to get it perfect. You're not going to find your exact cattle there, like the exact same weight, but just something in the ballpark. Do you have any other comments on that, Jordan?
Nope, I think you're right on. Just like I said, something representative.
One thing though, you were talking about, on those, I can't read the market report, but what you need to do is go over there and look at, understand that, whether yours are fancy, or unweaned, or, know
Right.
what they are. If they're calves that have been weaned for 60, 70 days and everyone's black and they've got more value. I know for myself, what I do is I take the weight class of number ones and the weight class of ones and twos off this market report.
Mhm.
And that's how I price cattle.
Okay, so
Like-
you kind of do an average of
Yeah.
two
And,
different.
and the reason I do that, Chelsey, is I know my cattle are not number ones in quality. They're number ones in that
Yeah.
they're a potload of them. And so you understand what I'm saying? That's how I start out pricing my cattle.
Yeah, I think, you have to, what we've been saying all along, be honest with what you have, right? If you just bought a bunch of unweaned calves that are, then let's not call them fancy number ones,
Yep.
right?
Yeah.
They might get there, but they're not there right now.
That's
So,
correct.
yeah, that's a good point, Wally. Thanks for bringing that up. And really, that's all I have here. Jordan and I were talking last night and we're thinking there might need to be a number 2 to this inventory webinar and go tie it back to the Ranch Right financial statements and how this information that you give us here applies or comes out there. But we can stop sharing. Other than that, do you have any
Very
more questions?
well, Chelsey Waters.
Oh, thank you. Thank you for your help, all of you.
And so, Jordan,
Yes.
stay on. I want to straighten you out a little bit too, since I didn't realize I was going to have this opportunity.
Sounds good. I'm ready for it.
Hey, I'm
Everybody
glad
else
it's
can
Jordan
stay
you're
on.
straightening out or not me.
Yeah.
Good luck,
Nah.
Jordan.
Thanks, Eric.